I'm going to take a look at a number of charts here. They're all going to be daily data for about the past year from when I'm recording this, because I want to make a very important point to you. So first, let's look at some charts. This is Google Daily. So we're going to look at stocks and ETFs and some commodities or futures markets, several markets, to show you that the point I'm trying to make transcends all markets and all time frames for that matter, even though we're only looking at daily data. So again, this is Google daily data for about the past year. Look at every correction that was made during what in this period of time was a really consistent bull trend. Every correction was in a well-defined pattern typical for a correction. Well, almost every one of them was. So here we had an ABC decline off of this high, little ABC. These corrections, well, actually, we can even look in there. That was a little ABC, little ABC. They're so short in time that we'd almost have to go to intraday data to really see the pattern. But again, ABC, this decline, ABC, bull impulsive trend, a correction, some sort of more, it looks like an ABC, but more complex sort of correction. The point is, as it was being made, obviously a correction. And then again, ABC, lots of ABCs. Every market, every time frame makes a lot of ABC corrections. Now you might say, oh, this is after the fact. Well, the first thing I'm trying to impress upon you is that most corrections follow all the rules and guidelines for some type of correction, meaning at least 3 sections, which is for an ABC, are more than 3 sections that overlap and are not impulsive waves, are not impulsive trends, but there's some sort of more complex correction with overlaps. Let's look at some more, and then we'll see how we use this information. Again, this is, what is this? This is Apple Daily over about the past year. An ABC correction. Here's one that is not, at least it doesn't appear to be, an obvious corrective pattern. So that's one that was a significant correction, was not an obvious corrective pattern. This, an ABC, again, these were just 2 and 3 day little corrections. A, B, C, D, E correction onto a new high. ABC advance. Significant decline. ABC advance, decline to a new low. From this high, ABC advance to a new high. And when the high was complete, ABC followed by an advancing swing. Almost every correction is easily identifiable after the fact, I understand. But with what you've learned about how to identify if a market is in a position to complete a correction, such as the overlap guideline. If we've got 3 sections and we make an overlap, it's probably a correction. And what follows a correction? This is why you might want to focus on identifying corrections, is that when a correction is complete, the trend prior to the correction continues to a new extreme. So boy, if you can identify the end of those corrections, you got a heck of a trade strategy. And knowing that most corrections unfold in well-defined corrective patterns of either 3-section ABCs of one form or another, or some form of complex correction that is an obvious non-impulsive. So it's not impulsive, it's got to be a correction. Let's look at a few more. Here's the ES, the S&P. And again, here was a beautiful ABC correction, impulsive advance. ABC correction. Then we had this just consistent bull trend. These were just little 2 and 3 day corrections. Potentially, if we looked at the intraday data, we would see there were corrective patterns. But it was just higher highs, higher lows, just a relentless bull trend. Then we had an ABC correction, resumption of the bull trend to new high. An A, B, C correction. Resumption eventually to a new high. ABC correction. Big bull move to a new high. Back here, this is fairly recent. ABC correction, new high. So you may not identify the end of each one of these little corrections. And the point is, if it's not identifiable as it's unfolding, doesn't meet the rules and guidelines for a correction. So maybe you're going to pass up that trade. Maybe you're going to miss that next section of a bull trend. Depends on your time frame, of course, and whether you're doing relatively short-term trades of a few days or looking for trades for a few weeks. But you think it might be useful to focus in on identifying the end of the corrections. This is gold. We had a sharp decline. Contracting triangle, A, B, C, D, E. I mean, early on, this was giving you all the signals that it's making a correction. Decline to a new low. A, B, C, and then it ends up with an A, B, C decline, and then a wave C to a new high for A, B, C. Again, as it's unfolding, you can identify an A, B, C. You can identify an A, B, C down. It comes up and trades into or closes into the range of the wave A. This is probably not the resumption of an impulsive trend. It's probably, we go backwards and say, well, that should be an A. This should be an A, B, C, B, and then we should have a wave C that typically tests or exceeds the extreme of wave A before we begin a new decline. What's going on here? Well, it's not impulsive. If it's not impulsive, what's it probably going to be? Why is it not impulsive? Well, what's the rule? If we were looking at this as a 1, 2, 3, 4, and then a new high, well, this if we had labeled it as a wave 3, as soon as this section exceeded this wave 3, which is shorter in range than this section, we knew it couldn't be impulsive. It had to be corrective. I guess it doesn't have to be, but it was probably corrective of some sort of corrective advance. Impulsive decline, A, B, C. Impulsive decline down. We continued down. These little corrections, they don't look like they were ABCs, even if we broke it down. Maybe not. So it's something else going on. We want to trade what we know, what we understand, what is fitting the rules and guidelines as we know them based on Elliott wave. ABC correction, new high. ABC correction, continued advance. How about, here's notes. This is notes, boy, just a relentless bear trend from back in 2000, and this is early 2020, I guess, or late 2000. Yeah, late 2020. So anyway, relentless bear trend. But look at every one of these corrections, and I realize, again, it's after the fact, but we were given, based on the rules and guidelines, a high probability that they were making corrections as it was being made, so we can prepare to identify the end of the correction. So again, A, B, overlapping A, B, C. I mean, such an obvious correction, we would have identified it as a correction long before the end of the wave C, so that then we can use our rules and guidelines and patterns and subdivisions to identify when it's complete. Then we have an impulsive trend down. Here was a funky correction, made a new high, and it wasn't an ABC. So they're not all going to be that. What we want to do is recognize when they are. ABC correction, new low. ABC flat correction, new low. ABC continuation of the bear trend. So the whole point that I'm trying to bring up is, again, corrections, the end of corrections are much easier to identify than the end of impulse trends, because there's plenty of impulse trends that are not idealized and recognizable 5-wave impulse trends, such as, just take a look at this one. Yeah, I can go back afterwards and I can probably label these subdivisions and come up with a nice 5-wave decline into that low. But I can tell you, at the time this was going on, you would probably not have labeled this as a wave 5 final low. I'm not saying we ignore impulse trends. Of course we don't ignore them, but we want to possibly, part of our trading plan, a good part, might be focusing on identifying the end of corrections. I know traders that have been subscribers of mine, some of them 15 and 20 years, that's all they do. That's all they do is identify the end of corrections so that they can identify really high probability, low capital exposure trade. How about Bitcoin? Bitcoin's become a real popular trading vehicle lately. ABC, just beautiful. This is textbook stuff. Impulsive, ABC. Impulsive, ABC. New high. Then we had the sharp decline. A, B, C, D, E correction. It was just A, B, C, and then came closing into the range of that first advance, probably making a correction. And then an impulsive decline. Then how about here? A, B, C, D, E. Pretty much a contracting or flat triangle. A new low, but it didn't continue. It was only a few days. Ended up being a good short-term trade setup and not a typical follow-through. But the point being is that we could be looking at this as it was developing and say, not a time to buy. It's not a time to buy because this is probably making a correction within a bear trend. So I just wanted to bring this to your attention. You can go and look at any time frame charts, just bring them up and look at how many of those corrections ended up being very identifiable, either three waves, ABC, types of ABCs, whether they're zigzags or flats, and are the second most frequent type of correction, which again is a 5-wave, we call it triangle or flat, an A, B, C, D, E. Once you gain that confidence that you can identify the probable end, or I should say when a market's in a position to complete an ABC and identify the early signals that it should be complete, you have a heck of a trade strategy. And a lot of the trade setups that we're going to look at in this chapter are going to be identifying the end of corrections to enter the trade, and then identifying the impulse trend once it gets underway and where it is within that impulse trend. When we're looking to identify a pattern reversal signal, we're looking for an early entry or an early signal that the last section of some wave structure could be complete. In a lot of cases, we're looking at the last section should break down or subdivide into 5 sections. So we're looking to see when the wave 5 of that last section is complete, whether it's a wave 5 of a higher degree or a wave C, or the last section in a complex correction or whatever. Well, let's take a look at a couple of more examples. This is the Russell Index, and some data from, in this case, it was the March 2020 high. We had this initial decline, which it nicely subdivided into 5 waves. And as we know, a 5-wave section cannot be a complete correction because corrections should not end in 5 distinct waves or 5 distinct sections. They should have at least 3. In other words, we have the 5 waves down, that's section 1, and then we should have some sort of correction against the initial decline, and then another decline. The third section, that's the minimum anticipated for a correction that should test and usually exceed that first section down. So we're going to look at this as a probable wave 1 or A. We had a nice A, B, and possibly working on a C. Again, the minimum structure for a correction, an ABC, 3 sections. So as of the last bar in this chart, we're in a position to complete an ABC because this is the third section up. So the objective here is to get the earliest signal possible and a confident signal that this section up is complete. Because what occurs when this is complete? Well, a resumption of the bear trend, at least one more decline, that will probably at least test, and probably exceed this initial low. So the earlier we can get a firm reversal signal, the better. And of course, if the market comes down, the Russell comes down and closes below the closing high of the wave A, then that's our initial signal that a wave C could be complete. It's not a firm signal it's complete, but it's that closing overlap that more than likely it's complete. But it would take a close below the closing low here and a trade below the low for the confirmation that it's complete. And that's a long ways away from where the market's at right now. So let's see if we can break this down, have a confident breakdown of this section up, and find an earlier signal. Maybe a signal when this section is complete, very close to where a reversal may be. So we want to break it down similar to what we did here. So if this is a wave C, it should break down into 5 waves. That would be typical. So we can go to a smaller time frame, in this case, let's say the 240-minute data, and see if it makes any sense, this structure coming up, and if we can identify 5 distinct sections coming up, because it should be complete in 5 sections. Let's go to the 240-minute data. And here we have the wave A and then the wave B down, and here's the advance. Now, I've already labeled it, and this is as of the last daily bar in the chart. So you had a pretty clear 1, 2, 3, 4, 5. And then a correction, and then another 1, 2, 3, 4, 5. So that's probably a 1 and a 2 and a 3. It makes sense. And this is a little ABC decline, and it looks like we've just maybe made a slight new high there. So if this is an ABC decline, and if it's a potential wave 4, then a pattern reversal signal is a decline below the wave 4. So this happens to be a potential wave 4 of the wave C. And if a wave C is complete on 5 subdivisions, then that should be a good signal that wave C is complete. Of course, it depends on where it ends up on the upside. So is it an automatic, it's a pattern reversal signal, but is it an automatic trade signal? Well, not necessarily. But it's the first signal we look at that we've made the reversal. Then we might want to ensure that the market makes a lower close, or maybe we have some technical indicator, some momentum indicator makes it a reversal, that sort of thing. But from a pattern standpoint, it's an early signal that we've probably completed the advance up, what we're calling this wave C. Go back to the daily. And if that's the case, then more than likely the trend's going to continue down and exceed this March low. So there's a long way on the downside, and if we get a signal fairly close to the top, very minimal capital exposure for the potential of a fairly significant decline. So I'll add some more bars onto this chart. And we continue higher and higher, and oh boy. There's the last bar of the next day. We continued higher, really nice, and now it really looks like a nice wave 5. And then we came down and traded below this wave 4 low. So more than likely, notice how I'm phrasing this, I don't know if for sure this wave 5 of C is complete, but from a pattern perspective, more than likely it is. Now, would we take a sell signal on a trade below that low? We might. When we get into the section where we're looking at price and time and momentum reversals, that sort of thing, if we happen to be near some price and time targets to complete a top, and then we complete a wave 5 top, we may take the signal as soon as we go below that low. We may wait for the end of the day and ensure that we make a lower close by the end of the day. I'm a real believer that closes are important, especially on like the indexes. So let's add another bar. Let's just see. I don't know if this day is done. This is 240-minute data. It's probably done. And there we go. This was the end of the day. So I would go and look at, did we make a lower close? I can see here we made an outside down day. Certainly looks like we made a lower close, yes. In fact, this is what we call an outside bear reversal day, and it's a 3-close reversal. That means it closed below the closes of the past 3 days. That's a pretty good reversal signal, particularly when we're in almost an ideal end of wave 5 of C. So if I had not taken this go short signal below this low, by the end of the day where we had the lower close, the 3-close reversal, that would be kind of the nail in the coffin for this probable wave C, which is a higher time frame, 2 or B. And the next day, I would develop and initiate a specific go short trade strategy if I hadn't gone short on this day. So that's how we use multiple time frames or different degrees of trend or subdivisions, however you want to phrase it, to identify a reversal in a higher time frame by looking at the subdivisions of that time frame to see when that section of trend is complete, because that section is potentially the end of the higher time frame trend, in this case a higher time frame ABC. Well, this is silver daily data. Let's take a look at where we're at as of the last bar of the chart. Coming off of this high, we have really a clearly defined 5 sections down. Boy, look at the very symmetrical, just 1, 2, 3, 4, 5. Now, is that a 5-wave impulse trend? Well, probably not, because we've closed into the closing range of what we might call the wave 1. So it's just as likely to be an A, B, C, D, E. And if that's the case, it's a possibility we just completed a major correction here that lasted a few months. And if we're in the 5th section or the wave E, and we don't, by the way, we don't even need to make that judgment. We just need to understand that we're in a position to have completed 5 sections, and 5 sections is the second most frequent type of correction, an A, B, C, D, E, and of course it's also an impulse trend. So either way, it would certainly behoove us to get an early signal when this section is complete, because we've got a good possibility that when it's complete, we would make an advance that would be greater in time and price than either of these sections. So let's take a look at where we're at on this last section down. Can we look at this daily data and subdivide it nicely? Well, we almost can. It looks pretty clear. We'll take a look at the intraday data as well, but I can see this real clearly as a 1 and a 2, probable 3 and a 4. And if that's the case, we're already in the 5th section or the 5th subdivision of this last section down. And the 5th, in this case, the 5th of the 5th, or the 5th of the E, either way, we'll just call it 5th of the 5th, should be the final short-term section down before we complete the entire decline from that high. That's a pretty important piece of information to have. So if we can get an early signal that we made a reversal here based on pattern, it'd be really helpful. So as it stands right now, if indeed this is 1, 2, 3, and 4, then we'd need to take out the wave 4 high. If we advanced above what I got labeled as a wave 4 high, it should complete not just this section, but the whole section down. What about if we can get an earlier signal? Because again, that's a fair ways away from where the market's at. So let's see if we can break down this section coming off of the March 18th low. So again, I'm going to go to intraday data coming off of the March 18th high. Well, it looks pretty clear here. There's a 1, an ABC, 1, 2, 3, 4, 5, completes a 3, another ABC. Here's the wave 4 high that we just were looking at on the daily data. So the question might be, can we break this down? Break this last section down? That could be a wave 5 of 5 of 5. Well, it's not as clearly defined sections as back here, but sometimes just use a little logic. A little decline, kind of sideways, decline sideways, and then acceleration of the trend down. That's like a capitulation. Where did that begin? And that began right here. It'd be the high of this last day we're showing on the chart. So we could look at this as a 1, 2, 3, 4, 5. Or we can just look logically and say this is where the capitulation came. If we can come back up and trade above that high, we've broke the bearish pattern of lower lows and lower highs, and we more than likely completed this section, which has completed this section, which has completed the whole structure going back to the February high. Potentially a multi-month low. At the very least, it looks like a multi-week low. Boy, this is something we'd want to be aware of. And we're using real simple pattern analysis here. I'm going to add some data. There we go. This is the next day's data, and then that's 2 days later data. Because remember, as this changes colors, we're changing days. This is 240-minute data. More than likely, we've completed a multi-week, maybe even a multi-month low. And in fact, look at this advance. There's two things about this advance that are also indicating we've completed a higher time frame low. Not just the pattern reversal signal of taking out this high, but number one, we've had a rally greater in time and price than any since this top. That's an overbalance of time and overbalance of price, as W.D. Gann used to say, and it indicates that more than likely the trend has changed. What's the other thing? What else do you see here? Well, boy, this is just as clear a 1, 2, 3, 4, 5 as you're ever going to get. That's textbook stuff. That means we've reversed to an impulsive pattern on the upside. That's another signal that more than likely the trend is reversed to bull. And what's important about this, and I'll go back to the higher time frame, the daily, is that once we complete this low, we've probably completed the higher time frame low. So that's how we've been able to break it down, this higher time frame, into the 5 sections of this last higher time frame 5th section, and then we're able to break down these last few days to give us a really solid reversal signal by taking out this high, by having an advance greater in time and price than anything since the last significant high, and having the advance being 5 waves impulse, which that itself indicates a bull trend. So let's take a look at another example with silver. In fact, this is that low we were just looking at, and indeed, we had a significant bull trend off of that low. And let's take a look at the data up through the end of the data as of the end of this chart, which, by the way, is today, the day I'm recording this. So this advance looks like it's been a clearly defined 5-wave advance. And even just on the daily data, we got a 1, correction, 2, and then it looks like this is nicely subdivided into 5 to complete a wave 3. That's how wave 3s should subdivide. Then we made a clearly defined A, B, C correction, probably a wave 4. And then look what we've got up since this, what I've got labeled a wave 4, potential 1, 2, 3, 4. Now we had that overlap here, but we didn't have a closing overlap. Boy, that's going to be, if you learn nothing else, if you learn how closing overlaps are more important than just range overlaps. So probable 1, 2, 3, 4, and we could be in a 5. Not necessarily complete yet, but when this is complete, what's important here? More than likely, we're going to have at least a correction greater in time and price than any correction since the low. In other words, a correction greater in time or price greater than the 2 or the 4. Now, that's not a huge correction. It's not a bear trend by any means. I mean, that's the minimum expectation. And what if it were going to be a higher time frame top, more than just 3 or 4 days? That would depend on some of the longer term pattern analysis, some of the time and price momentum. But right now, we're just looking to identify the end of this section up. Well, this is the 240-minute data coming up from that late March low that is a potential wave E, potentially completed a much higher time frame corrective decline. This is the data up through about when I'm recording this. And I like 240-minute data for the 24-hour futures data and the Forex data, that sort of thing. It's just a nice compromise of we see a little more detail than we do in the daily data, but we don't get such short-term like 15 and 60-minute data where there's squiggles all over the place and the patterns are not as recognizable. Sometimes I'll go down to 60, but that's about the shortest time frame that I would use. Okay, let's take a look at where we're at. Coming off of the March low, just a well-defined advance and then a nice ABC correction. Got to look at that as a probable 1 and 2. Another well-defined advance breaks down nicely into 5 waves. And then we have another little prolonged correction. It's another ABC correction, a little not quite as simple as the wave 2, but then we have a wave 4 ABC correction. And then we have another advance up through the last bar in the chart. A well-defined section up, that's a 1. Of course, there's a correction. Then here's another well-defined section up. Looks like it broke down nicely into 5 waves. We can call that a 3. And if all of this is correct, we have the wave 5, we have the wave 4 and 5 of 5 to complete. That would complete this advance. So as of the last bar of the chart, here's what we know. And remember, we want to trade on information that we know. We know that we have well-defined waves 1 through 4 are complete. And that would mean we're in the wave 5 section. Within the wave 5, so far, it appears to be breaking down nicely into a 1, 2, 3, which would mean we should have a wave 4 correction. May be complete, probably isn't because it's pretty short, but at some point we should complete a wave 4 correction followed by a continuation to a new high. And if that should occur, that would indicate we're in the 5th wave of the 5th wave coming up from this March low, and with 5 waves, and we'd be identifying wave 5 of 5. What great information to have. Now, I'm not saying that every market breaks down into these almost ideal subdivisions as silver is doing right now, but wouldn't it behoove you to recognize if a market is and recognize what that means for the trend and the potential end of the trend, and that then in advance you can identify what is the pattern reversal signal that will complete that trend, and you can use that information for specific trade strategies. So in most cases, we can break down the subdivisions of most sections of trends and counter trends. And once again, that almost all, the last section of a trend or a counter trend is going to subdivide into 5 waves. And it's going to subdivide into a clearly defined impulse trend. That's the subdivisions of that final wave of a trend or a counter trend. And the beauty of it is you can then identify in advance, before the signal's made, a firm reversal signal, a firm pattern reversal signal that will indicate that the whole wave structure is complete and that the higher time frame trend should be complete as well. What great information to have to develop specific trade strategies. Well, this is the Japanese yen daily data. And let's assume as of the last bar in this chart that our other technical analysis and our pattern strategies, etc., are indicating that the yen's in the beginning stages of a pretty serious bull trend. So we want to identify the end of any correction for a trade strategy to get long this market. So here we have an advance, and then we have a potential ABC. Of course, we have a question mark by this ABC. What we can say as of the last bar in this chart is that the yen is in a position to complete a wave C. But we need some pattern reversal signal, some sort of structural signal that says a correction is complete. So if we have an A potential, A, B, C, what is the pattern reversal signal that the wave C is complete? Well, we close above the wave B closing high. That's one signal, of course, simple. And a trade above the high trade of the wave B. So that might be this bar over here. Let's just draw a line on this. And I'm going to make that thick, and I'm going to make it green, because a close above it would be positive, a very positive thing. And of course, a trade above the high would be very positive as well. So as of this point in time, we don't know if the market's making an ABC correction. We know it's in a position to have made an ABC correction. And if we close above 103.889 and trade above the 104.198, we'd have very firm pattern reversal signal that we have completed an ABC correction. Or at the very least, even if we made those signals and then went sideways, if we did by chance go to a new low, it would still indicate that we're in some sort of corrective pattern. But it'd be a good signal to get long for the early stages anyway of a probable bull trend. So see, we don't have to make this complicated. We don't necessarily have to subdivide into really small degrees on the intraday data. We just want to look at the basic picture. What is a sure signal that, in this case, a correction is complete and the bull trend should continue to a new high? Because that signal then initiates a specific trade strategy. And we can use it on daily data. We don't have to get into the intraday data, even though this is a Forex market and it's available to trade at very high leverage, is that we don't have to trade high leverage, and we can even trade ETFs that follow it with little to no leverage. The point is, we want to take advantage of all of the work we've done in our technical analysis and pattern strategies and reversal signals. So let's add some bars on the chart and see what might occur. Wow, as of the last bar in this chart, we not only closed above the wave B, potential wave B high, closing high, well now it is a wave B, we even traded a few ticks above the intraday high of the wave B. So in one bar, we've given a strong signal that we've completed, or the yen has completed an ABC correction, and we're in a position to continue a bull trend, but much higher. So again, it would depend on our analysis of what degree of low this is 2 or 3 weeks ago. So really simple, really straightforward, and really reliable reversal signals. Let's add a few bars on the chart. Well, indeed, the yen continued to advance. And one of the reasons this made such a great reversal signal is this correction was so shallow that once we made the pattern reversal signal, we wouldn't even have her stop all the way back to this low. We would have it at this swing low, because if we've reversed, if we've completed an ABC and we've closed above it, we should not come back and close below this low. So we could literally have our stop within 2 days of the reversal signal. And boy, this is what you want to look for. If this were a very deep ABC correction, yeah, then we might have to go down to a smaller time frame if possible. If not, develop another confirming strategy for a reversal that would give us lower capital exposure. We'll talk a lot about that in a later chapter on our specific trade strategies and position size, that sort of thing. Well, this is IYR Daily Data. It's a real estate sector ETF. Again, a lot of high volume, actively traded. We used it in an earlier example of a complex correction. So let's look at this correction. Obviously a correction, lower lows, lower highs, but lots of overlaps, etc. So our objective is to identify whenever it's in a position to complete the correction. When it is, it's in a position to develop a specific trade strategy and to identify a specific pattern reversal signal. So there's a couple possible Elliott wave counts here. They both basically tell us the same thing. Could be an A, B, C, A, B, C, B, and then C, D, and E. The second most common type of correction is A, B, C, D, E. It could also be A, B, C, X, A, B, C, X, A, B, C, a series of A, B, Cs separated by X waves. Well, I'll let the Elliott wave academics argue which it may or may not be, which is the better wave count. All that I know is any time it completes an ABC decline, it could complete this higher time frame series of ABCs. So as of the last bar of this chart, we can say that IYR is in a position to complete this ABC decline, which could complete the entire correction going back 4 or 5 weeks. So what would be the pattern reversal signal? Boy, something just really simple that would indicate this is complete. Again, a close above the wave B closing high is a strong signal that it's complete. So let me put this in at first and then talk about it just a little bit more. And then, of course, we also want to trade above the wave B high. So one of the things I kind of want to impress upon you is don't get too complicated. Don't get that paralysis of Elliott wave analysis. If we're doing a series of ABCs, then anytime we're finishing up on an ABC, we have the potential to have completed the higher time frame correction. So a close above 83.48 and a trade above 83.74 would put the market in a position to have completed the correction all the way down from this high. And where would our stop be if we close above here and trade above here? Well, it'd be whatever the low is prior to the close above the wave B closing high and trading high. So it'd be a very minimal stop with the potential for a significant gain, a continuation to a new high. And by the way, the longer a correction lasts, this is just an axiom of trading from forever, usually the longer the correction lasts, the longer a trading range is or complex correction, is the greater the continuation of the trend. So this is just, it's like a spring getting wound up. And when it finally breaks away from it, there's a lot of buying power in that market to really push the market forward. So again, don't get frustrated if you've got a long and prolonged correction, particularly if it's kind of essentially sideways like this is. The breakout away from that can be substantial. So let's add some bars onto this chart. Well, there we are. As of this bar in the chart, we've closed above the closing high. We've traded above the high of the wave B. This is a really strong pattern reversal signal that this ABC is complete, and this ABC is in the position to have completed the entire decline from the November high. What a great opportunity for a long trade with minimal capital exposure and a high probability of continuing the trend to a new high. The completion of any one of these ABCs was a setup on the long side. Of course, as we already know, is that the follow-through was very minimal, and the follow-through were all ABCs. And of course, if the bull trend were resuming, they would be 5-wave advances, not ABC advances. So we don't know how this is going to play out. We know that we're in a position to have completed this decline, and we can have a very well-defined minimal capital exposure to take advantage on the long side. So I'll add some more data here. Well, we've already come up and closed and traded above this last higher time frame swing high. More than likely, this higher time frame low is complete. And it looks like, without even drawing here, we've already come up and closed above and traded above that high. More than likely, this bull trend is resuming, and we should assume, and we'll get into this more later in trade strategies and time and price targets, that the next section up will probably be comparable to this one. So we probably got a long way to go on the upside. And we already would be able to adjust our stop relatively close to the market to this swing low, because if the market's bullish, it should make higher highs and higher lows. So again, you want to remember, keep it relatively simple, and all of your trade strategies, all your reversal signals should be very logical. And they should identify a clearly defined reversal signal that will then have a clearly defined protective stop. In other words, that point to which you're incorrect about the continuation of the trend. And once again, we'll talk a lot about those in the trade strategy section. This is Tesla daily data. And let's take a look at this. We've looked at it also from a pattern perspective in some past examples, but coming off of the January high, nice 5-wave decline for a potential wave 1 or A, and potential ABC correction. Let's look at a couple things here and see how we might develop a pattern reversal signal and a trading plan that makes sense without getting paralysis of analysis. So we're looking at this, what I've got labeled a wave C for a 2 or B high with a question mark. These, by the way, are parallel lines, real typical targets to complete an ABC. When you connect the beginning of the correction with the wave B low and then take it from the wave A high, frequently the wave C comes right up to about on that parallel channel line. But that's for another discussion. So we came up to it, made this strong reversal day. The first thing we look at, can this be a wave C if it's subdivided into 3 distinct sections? Typically, it's not. Typically, a wave C should subdivide into 5 sections, not into 3 sections. So we have a question mark here. But let's just say we have some other technical positions, maybe time positions or price positions, that we believe with fairly good confidence that indeed we've completed a correction here. So we want to identify a pattern reversal signal that will give us an early warning that indeed we've completed this correction, and we can consider either that reversal signal to adjust our stops closer to the market, or even to consider a short trade. So let's just add some data on here and see what we can think of logically on what's going to break the pattern, or at least give us an initial indication that this advancing pattern in ABC correction is complete. As of the last bar in the chart, the market's come down for several bars, and then it looks like it's making a corrective rally. Well, what would indicate that the top is complete? Well, if this ended up being a correction, and if it came down and closed at a new low. So that would be a solid pattern reversal signal, taking out a swing low. By the very definition of a bull trend would be higher highs and higher lows. We take out a swing low, and more than likely, we're no longer in a bull trend. And particularly, even though this is a minor swing low, particularly after we've come up with a potential end of wave C that would be a pretty firm signal. What would be another signal? Another would be a closing overlap. However we want to label this, we have a closing overlap into a swing high, and that's another indication that a correction is in a position to be complete. So we could consider that as well. But the best initial signal anyway, just be this close below 714.63. Let's add some data onto the chart. Well, as of that point in time, we've made a new closing low. Let me just hit the C for the close only data. So this is not typical action, shall we say, of a bull market. So again, that's a good setup. And from my point of view, either to adjust your stops if you happen to be long or to consider a short trade. This is a setup that's indicating this ABC correction should be complete. And if we get a close below 691.05, that would be a confirmation that it's complete. Let's just add some more data on here. A couple bars later, we closed below this swing high. So more than likely, this ABC correction is complete. Notice I always say more than likely, probably, all that sort of thing, until it's got a solid confirmation signal, and that would be, again, a close below the wave B closing low and a trade below the wave B low. There's always a possibility it's going to continue in some sort of complex correction. But we know at this point, because we've closed also well below the wave A closing high, that this is some sort of correction. It's either a completed ABC, or if by chance it continues sideways to even higher, that still should be part of a correction. So it's a great signal, a great setup. Let's just add some more data, see where we go with this. Well, that's actually the last bar, the last data as of the time I'm recording this. So I don't know how it turned out. One of the reasons I like to always use recent examples, current data, on any examples that I show, so you're not thinking that I'm just looking for the ideal, well-chosen historical example that all turn out correctly or the way anticipated or whatever. Who knows how this turned out? Here's what I do know. I do know that as of a few weeks ago, this top in mid-April for Tesla was in a position to complete an ABC correction. Here's what I do know. I do know that Tesla has come down and closed below the closing high of the wave A. It has come down, made a swing low, a little corrective rally, and then closed back below the swing low. That's another indication that the wave C is complete. And then it's come down and closed below the swing high. Another indication a wave C is complete. So more than likely, we've completed an ABC correction. Even if Tesla should continue sideways to up, it still should be part of a correction that eventually, when complete, below the January high, will roll over and continue down to a new low. Why may we want to focus our energy on identifying the end of a 5-wave trend? Well, the last section of almost any impulse or correction should subdivide into 5 waves. So whether we're looking at whatever degree impulse trend we may look at, or whatever degree a correction, whether it's ABC or a complex correction, usually the last section of those structures subdivides into 5 waves. So if we have an early signal that a wave 5 is complete, we have an early signal of a trend reversal. And a reliable early signal of a trend reversal usually means we can consider a specific trade strategy with much less capital exposure than a later signal. Let's take a look at an example, and we'll look at it in some detail. The data I'm showing on the chart here is Apple, and it's weekly data for about 2 years, a little more than 2 years worth of data coming up from the January 2019 low. And boy, it just looks like it was subdividing or dividing nicely into 5 sections, coming up from the low, a 1, then an obvious correction, larger in time and price than any since that low, for a probable 2, and then we had an acceleration of the advance and an impulsive trend to a new high, which we would expect following a correction. And then we had another correction, possible wave 4, only 3 weeks long, but over 25% decline. By the way, the wave 2 was over 35% of a decline. So we get some perspective here. And then coming up from this September 2020 low, it looks like it's again the wave 5 of higher time frame is subdividing into a 5-wave trend, which is exactly what it should do. So is this the final section up of a higher time frame 5-wave trend from the 2019 low? Well, we're not going to make that judgment at this time. We are going to recognize that we are in a 5th section up, and that the final section to a new high should subdivide into an impulsive 5-wave trend, and the wave 5 of 5 should subdivide into a 5-wave trend itself. So the earlier signal we can get that this trend is complete, it depends on our trading time frame, whether we want to adjust or stop or exit for to avoid a potential 25 to 35% decline, because if this is a legitimate waves 1 through 4, and this is legitimate waves 1 through 4 of 5, when this section is complete, we should then have at least a correction greater in time and price than either the wave 4 or the wave 2. So the longest correction of waves 2s and 4, the longer is 6 weeks, and the greater is 35% in price change. So that could be fairly significant. Now, our time frame may be such that we don't mind sitting through corrections like this of 25 and 35%, and these just lasted a few weeks before we went to a new high. But given that this is the 5th section up from this January low, it may have more severe consequences. So we might want to be aware of at least protecting part of the position, maybe exiting part of a position when we finish this final section up. Let's take a look at how we might be able to identify the end of the wave 5. In other words, have a pattern reversal signal that comes fairly early. Well, we can do one of two things here. Number one, depending on our time frame again, we certainly could draw a line just across the wave 4 low. And if the market, this market apple, took out what I've got labeled a wave 4 low, the last swing low, it would indicate that the higher time frame wave 5 is complete. So it'd be a relatively early pattern reversal signal. But given that this is almost ideally subdividing into 5 waves itself, what if we could identify even earlier signal that this wave 5 of 5 had reversed and had been complete? In other words, a pattern reversal signal to complete this last advance that's been going on for a couple of weeks or so. Well, let's reduce our data down to daily data and see what we see. So here's our daily data, and again, we've drawn that horizontal line below the wave 4 of 5. And as we mentioned, when we looked at the daily chart, if we take that out, we've probably completed the higher time frame 2-year trend for the wave 5. So let's see if we can go down and subdivide this last wave 5 of 5 and identify when this might be complete. Well, this is the 60-minute data coming up from the wave 4 of 5. I mean, our ideal is that we would be able to identify a pattern reversal signal when this section is complete, because that would indicate that the higher time frame wave 5 is complete, and potentially we've identified very early on the completion of a 2-year trend. What do we have here? Does this nicely subdivide into 5 waves? And from my point of view, no, it doesn't. So we could put some wave counts in here. Maybe this is a 1 and a 2, and we've come up to a 3 and a 4. We had this 1 bar
Really, this whole day was kind of volatile all over the place. So how does that work into the pattern? A lot of times we have volatility bars like that, and I just ignore them because this was definitely, I don't know what the news event was, but there was some news event that the market reacted to for a short time during the day, and then the trend just continued in the direction that it was trending before this news event. So here we have, is at the end of this day, we've got a new high, and we've got a well-defined swing low. And notice all the way up from what I labeled the higher time frame wave 4 low is its higher highs, higher lows, never took out one of the swing lows. So if we decline below a swing low, that would break the pattern of higher highs and higher lows, wouldn't it? It would break the impulsive pattern that we've had. So we could certainly look at, put a line across the last swing low and set our alert. We might even set a stop for part of our position if we happen to be long below that swing low. So we don't want to get paralysis of analysis. We don't want to be looking at too short a term and read too much into the data. But we're quite confident, I'll go back to the daily data, that we've got a nice wave 4 of higher degree at this low. It looks like it's covered up or it's not on there. I'm going to go ahead and put it on the chart. And quite confident that we've got 1, 2, 3, 4, 5 into a new high. So quite confident that this is the final section up, and potentially at least in a 2-year trend. So let's go back here. And we haven't taken out a swing low since this low. This has the potential, certainly, of being a wave 4. This sort of maybe an irregular wave 4 or whatever. So we take this out, and we've broken the pattern structure, and we'd call that a pattern reversal signal. We've reversed the pattern from higher highs to higher lows. Let's add some data onto the chart. Again, this is the 60-minute data. So as of the end of that day, boy, another big volatile day there. As of the end of that day, we've clearly made a pattern reversal signature in that we've taken out a swing low, we've broken the bullish structure of this pattern. We've probably completed this, we'd subdivide into 5 waves, which has completed the higher time frame wave 5 trend from this low, which has completed the higher time frame 5-wave trend from 2019. At least that's a potential. At least we want to be aware of this. We might not take action here, but we want to be aware of it and say, this is a possibility we've completed a 2-year bull trend. And market just kept down lower and lower. I'm adding about 2 more days. This is just only 2 days of data. But again, we've come down then and taken out that low. So again, pattern reversal. We've done something that broke the pattern of this final section up. So let's go back to the daily data. We can add a few days on here. Confirmed it as of this point in time. Now this is pretty important in that taking out this low indicates, I'll add some data on here, that we've completed, or potentially, we're in a position to have completed a 5-wave trend to the 2019 low, which would be followed by at least anyway, a correction greater in time and price than the wave 2 or the wave 4. So potentially greater than 6-week correction, potentially greater than 35%. Now that's some information that you can use. Again, it's depending on your time frame of trading, but this is the kind of information that you want to be aware of, and then you can use that to develop your trading plan, whether it's an entry strategy or whether it's adjusting your stop or any of those sort of things, anything that's useful for your trading plan. So I've added data on, and this is weekly data, up till the time I'm recording this. So it's matched in time to this wave 2. It's far short in price. Well, not far short, but it's definitely shorter in price than either the 2 or 4. So it would indicate that more than likely Apple is going to be sideways to down and exceed this low. By the way, let's take a look at what do we have here. What is this decline? Is that impulsive or is it corrective? Well, it looks more like, we're not going to break it down right now, but it looks quite a bit like, or probably making a corrective advance, and then we'll have another decline to a new low. Now, I don't know if that's going to happen or not. What I do know is that as of early January, Apple was in a position to have completed a wave 5 of 5 and actually a wave 5 of 5 of 5. And as I know, as of in February, when we took out the wave 4 of 5 low, Apple had confirmed that at least this 5-wave advance was complete. And if we have waves 1 through 4 here correct, it would indicate the higher time frame, wave 5, was complete. What I do know is that we had an impulsive 5-wave decline, and usually we should not complete a correction on 5 waves. That should only be, if we're making a correction, a wave A, could be a wave 1 or A, should make a corrective wave 2 or B, and then should continue to a new low, or at least test or exceed this low, in a corrective wave 3 or C. Typically, we would have greater than a 35% decline off of this top before this correction was complete. So all of that is valuable information to have, and all of that, we demonstrated how we had a pattern reversal signal of a small degree that warned us that we may be completing a larger degree. Let's take a look at some data, add it bar by bar, and see what the potential pattern could be as the market evolves. So as of the last bar on this chart, we have a decline, an advance, and then another decline to a new low. And it's a new intraday low, and it's a new daily low. So what could the pattern be? And we won't prejudice ourselves by what came before on whether we anticipate this would be a correction or to be the beginning of an impulsive bear trend. Well, it could be a 1 or an A, could be a 2 or a B. So let's label it as such. What could the market do to indicate that more than likely this is an A and a B, and it's making a C? Well, it's really simple. That's why this overlap rule is so helpful. And I should say overlap guideline. In that if the market comes up and trades into the range of this decline, then more than likely this is an A, B, and C. And if it trades above this high, that confirms that it's an A, B, and C. So let's put our closing low close on there, horizontal line across it. So if this market were to close above this close, more than likely it's making a correction, and it would have been in a position to have completed a wave C. Now notice I'm not saying that an ABC correction is complete, just that it's in a position based on the pattern to have completed an ABC. And it's probably not a 1, 2, 3. Definitely should not be a 3 because it's closed in the range of 1. Now I realize it could be a 1, 2, and then another 1, 2, and then continue in a bear trend. That is a possibility, but because of the overlap guideline, it's very unlikely. More than likely, it's a correction and in a position to be a wave C. And even if it did continue to a new low after closing above 34.039, more than likely it would be part of a more complex correction or some kind of correction other than an ABC. So it's really valuable information. And then what confirms an ABC is complete? Well, a trade above the wave 2 or B high, what I have labeled the wave 2 or B high, and are a close above the closing high. So let me put a couple things in here and see how valuable this information is without making a forecast, without making any judgments. And that's the beauty of identifying when a market's in a position to end a correction, is the rules and guidelines are really, really helpful, and we can very early on develop a specific trade strategy. In most cases, if a market did close into the closing range of a wave 1 or A, we can then immediately develop a specific trade strategy, in this case, go long. So let's add some more data on this chart. So it traded well within the range of the wave 1 or A, and even up above where the closing low is, but didn't close above it. As of that bar, as of that day, more than likely this is an A, B, C correction. So as of this bar in this day, we can consider a specific go-long trade strategy because the market's in a position to have completed an ABC. It hasn't confirmed that it is an ABC, and it won't confirm that until it either closes above 39,125 or trades above 40,128. But because it's in a position to have done this, to have made an ABC, it's in a position to develop a specific trade strategy. So do you see how really useful this is? Because there's some very specific guidelines and patterns and rules that indicate a market is first probably in a correction, probably has completed a correction, and confirms that it's complete. So it really behooves us to be alert to that at any point in time because what follows a correction in advance to a new extreme. So I'm not going to follow this through from entry to exit, but we're going to look at a few more markets which, without having a prejudice of whether it's making a correction or not, will simply follow the market bar by bar to get an idea if it's probably in a correction and if it's probably made a significant reversal and is going to continue to a new extreme. Well, let's look at this data. It's daily data. And what's the position of the market as of the last bar in the chart? We've had an advance, a little one-bar correction, and then a continuation to a new high. Is this market making the beginnings of a bull trend, or is this going to be a corrective rally? We don't have to make that judgment. Here's what we can do. Draw a horizontal line across the close of the 1 or A, and of course I would make it a price alert also if we're actually trading this market. So we got a 1 or A advance, 2 or B correction. Is this a 3 or is it a C? What should it not do if the trend is bullish? It should not close above the closing high of the wave 1 or A. And if it closes below the closing high of the 1 or A, then more than likely this is an ABC correction, and it would be in a position to have completed that correction and potentially in a position to develop an immediate go-short trade strategy. Let's add some bars onto this data. The next day, sharp down day, close below the closing high of the 1 or A. And let's just put in our closing low of this 2 or B, which it closed below. So what does that mean? So in one day, we not only closed into the range of the 1 or A, but we closed below the 2 or B closing low. This would be, as of this point in time, the market had probably completed an ABC correction. We'd be in an immediate position to develop a go-short trade strategy. We certainly have some great information that would warn us, don't go long this market. It's a market that's probably going to continue to a new low. So let's just say we did an immediate go short in this close below this area. And where would our stop be? Well, the stop would be no further than above this swing high. It's either an ABC correction or it's not. So let's add some data onto the chart. So I wanted to use this example to say they don't all work out. But the beauty of it is it gives us a specific signal for a trade strategy. It gives us a specific area for a protective stop. And then, of course, we can adjust the stop if the market continues in the anticipated direction. But in this case, we would have been stopped out. Now, whether we maintain the stop back at this high or we adjusted it after we made this swing high and then continued to a new low, which would be the logical time and place to adjust it. Because if the trend were bearish, what should it not do? Well, it shouldn't come up and trade above that swing high. We'll look at a little more specific trade strategies later on. But the beauty of identifying the potential for an ABC correction is it's a very high probability, once the signal is made, the setup is made, that the trend is going to continue and the correction will be complete and the trend will continue. And it also gives us a well-defined specific price level to place our initial protective stop. In this case, we're stopped out. They don't all work out perfectly. Let's take a look at this daily data of Tesla. And let's just begin by putting some potential labels on it. Potential 1 or A decline and a potential 2 or B advance. So if this is a A and this is a B, or a 1 or a 2, what should the market do? The market should soon continue lower to a new extreme, to be working then on a 3 or a C. Let's add some data on this and see what the market tells us as we add some data. We have a decline, an advance, another decline, another advance, but up to below this high. So far, it's not indicating either way whether it's beginning an impulse bearish trend or a correction. Let's add some more data and see if we can logically get an idea of what's going on here. Logically, what does it look like going on here? Well, the second type of correction, the second most frequent type of correction, is an A, B, C, D, E. Now, the one thing this isn't, by the way, is it isn't an impulse trend. It isn't the beginning of an impulse trend. It's a correction of some sort or another. And it could be a potential A, B, C, D, and E. Let's add some data on here. So why is this not an impulse trend? Because it's not making lower lows and lower highs. It's chopping back and forth, making all kinds of overlaps with prior swings, indicating that some sort of correction is being made. And so far, we have 5 distinct swings. And that's the second most frequent type of correction, is 5-section A, B, C, D, E. And typically, A, B, C, D, E's are contracting triangles. So let's just add some data. If this were in wave E, and the market is in a position to have completed a wave E, and if it is, what would be a signal and a signal for a specific trade strategy? Well, if the market makes an advance and then a decline and then takes out that swing high, given that it's already had 5 sections into this point in time, more than likely it has completed that correction. What should follow a correction pattern-wise? An impulsive trend of higher highs and higher lows. So it gives us a specific trade strategy for the potential completion of a fairly significant correction that lasted over several weeks here. So we have an advance, potential decline. We're not finished yet. But this is all we need to do in cases like this. When we're using daily data, notice I'm not using intraday data to identify the subdivisions of every one of these swings. We ought to be able to understand the position of the market and identify where it is within that trend or counter trend just from the daily data. And if we can't, then it's just probably a market that we should be ignoring until we can identify what the probable position is. So I don't know if the market's going to come up and close above here. I don't know if it's going to go down and make a new low. Here's what I know. I know that we've got 5 distinct sections of a potential A, B, C, D, E. Haven't broken it down in subdivisions, not showing any price relationships or indicator relationships, just the pattern signifying it's a correction and it's in a position to complete that correction. And if that's the case, and we've made an advance and then we have a decline, we could close above the closing high of that advance. That's a trend continuation signal that more than likely the impulsive bull trend is going to continue and the correction is complete. So following the end of a correction, we should have an impulsive trend, higher highs, higher lows. Let's add some more data here. As of the last bar in the chart, we've closed above this closing high, and we've traded above this high. We are this market is in an immediate position to consider a go-long strategy for the probable completion of a correction that lasted 6 or 7 weeks here. So the longer a correction lasts, and the more complex it is, typically the more powerful the trend is coming out of that correction. Just think of this as a spring being wound up, no conviction on the bull or the bear side, and it's actually becoming tighter and tighter and tighter. And when it's released, there's going to be a lot of buying power, or if it gets released on the downside, a lot of selling power is going to come into the market under the realization that that whole pattern is complete, and there's probably a significant trend coming up. So what a great strategy for an immediate go long. Where would your stop be? Is there any reason to have it any lower than below this little swing low? And the close is, let's put the closing level on. Particularly on stocks and ETFs, I find closes are very important, very important. Less so on futures markets because they trade 24 hours a day. But if what is this? This is Tesla. If Tesla were to come down and close below 408.09, we would not want to maintain a long position. It would be telling us clearly something else is going on. But once again, this is not a simple ABC zigzag, which has real firm guidelines of when it's probably complete, a real firm rule when it is complete by taking out the wave B extreme. This we just identified as a probable complex correction, of which the most frequent is a 5-section ABC type of triangle. And once that 5th section or wave E is complete, or potentially complete, is that then we can develop a specific trade strategy. Tesla just took off very strongly. This is the ES daily data. And as of the last bar in this chart, there's been a decline, potential wave A, an advance, potential B, and then another decline to a new low. So is this a wave C? And what would indicate that it is in a position to complete a wave C? Well, once again, let's use the closing data here. Let's just draw a horizontal line around the potential wave A closing low. And again, I like to make it thick, and I'm going to make it green. We close above that, the market would be in a position to have completed an ABC correction and a position to then develop a specific go-long trade if it's made. Going to add some data on the chart. Well, the next day, wow, really big up day with a close well into the closing range of this wave A. So is a wave A, B, and C complete? Probably. A, B, potential wave C. What we can say is the market's in a position to have completed a wave C, and it's in a position to develop a specific go-long trade. The wave C and an ABC correction would only be confirmed following a close above 39.1250 and a trade above 39.2450. That's the confirmation that a correction is complete. Let's add some bars on this chart. So we've had a potential ABC, an advance. We've now had a correction. We could work out a specific go-long strategy following a trade above this swing high and then a stop below whatever swing low is made prior to exceeding that high, as long as the ES has not first traded below what I got labeled a wave C low. Let's add some data on. Let's clean the chart up a bit here. Let's clean that up, clean that off, and I'll just put the close. Close above that high without a trade below that low is a specific go-long signal. Whoa! Big decline. to a new low, new intraday low, new closing low. So obviously this can't be an A, a B, and a C. So what is this? Is this the beginning of a bear trend? Boy, it looks like it. Big down day, big down day. These are huge days and closing on the lows. Well, what clearly indicates that it's probably not an impulsive bear trend is we did indeed have a decline, advance, another climb to a new low, an advance up into that range for a closing overlap, and then a new low. What would be an alternative to this being an A, B, C? Well, pretty clearly is that probably an A and then an irregular A, B, C to complete the higher time frame wave B, and then we're making a wave C. If that's the case, what would be the specific trade action? What could the market do to indicate that this A, B, C is complete? Well, again, trade into the range of the wave A, certainly, but really just a closing overlap in whatever the low close is up until that point in time. So once again, if it makes that, it's a real high probability signal where we can develop a specific trade plan. Now, we had the signal back here, but a specific trade plan never manifested itself because it came down and it never went up and took out the high. So now we've got a new low. Should the market trade above 37.99, more than likely this correction is complete. The next day, boy, this was a volatile period of time, wasn't it? So the market, as of this last bar, is in a position to have completed an ABC correction. So do you see how once the market is clearly signaled, the market is in a position to complete a correction, you can then develop a very specific trade plan. And of course, the market then has to unfold in a way to fulfill that trade plan and that specific trade strategy. So once again, continued on to a new high. So over and over and over again, when a market is in a position to have completed a correction, you really want to take advantage of that and recognize that. It's really important to recognize it and then take advantage of it. And corrections are the most well-defined patterns that give you signals when the market's in a position to complete them and then confirm the completion of that correction. This is the GDX. It's a gold mining stock index, and it's a very popular index to be traded, as well as many traders who are interested in mining stocks will look at the index and the position of the index first, whether it's the GDX or the XAU, one of the mining stock indexes, try to determine what is the position of the index, and then if they're nearing a position to make a trade, then they'll look at some of the component stocks and consider the trade in the relatively strongest or relatively weakest component stocks. So as of the last data on the chart here, this is daily data of the GDX. Is the GDX in a correction or is it in an impulsive bear trend? What's the basic position and trend of this market? Well, prior to the high that's shown on the chart, this was just an obvious textbook impulse trend, higher highs, higher lows, strong bull trend. And then following the high, boy, really choppy, lots of overlaps. So more than likely, this is not the early stages of a bear trend. More than likely, it's a correction within a higher time frame bull trend. So how would we label this? I don't know. Once we get into a really sloppy, lots of overlaps and that sort of thing, it's a complex correction. But to label it is to prejudice yourself, especially in a complex correction like this. Instead, why don't we keep it really simple? And what should the last section of a correction break down in? How should it subdivide? Well, the last section typically will subdivide into 5 sections of an impulse trend. So just like a wave C of an ABC should be 5 waves, should be a 5-wave impulse trend, the last section of a complex correction should also subdivide into 5 waves. So from any peak, if we can identify the end of the next declining section, if we can identify when it is at or near completion, in other words, when it has completed a 5-wave trend, is that it would then be in a position to have completed the entire correction. So let's just take a look back at this real quickly, and then we'll bring this more up to date. We'll add some bars on it. For instance, the higher time frame coming off of this peak, of course, is bearish. So this decline, very impulsive. How does it break down? Well, we might have to go to the intraday data, but we don't need to do that right now because we're looking at how does it break down following the last peak on the chart. And of course, this decline impulsive, this decline impulsive. Each of the advances are corrective, except this one. That actually looks pretty impulsive, doesn't it? Well, that's the way it goes. It doesn't always subdivide perfectly. But up until this point in time, pretty much this complex correction follows all the guidelines for a complex correction, where each declining swing has been impulsive, and the last one to finish off the complex correction should be impulsive also, and all but the one advance, anyway, has clearly been a correction, and that's how it should be, a correction against the correction. So our objective now is to identify when this last section down is in a position to be complete, because when it is in a position to be complete, that means that it's in a position to complete this entire correction. So that's when we want to focus on this last section down and how it subdivides and when it gets in that position to make a low. So that's the GDX. But let's say we don't trade the GDX. We're more interested in underlying stocks, and maybe those stocks that we're familiar with or that typically lead the market, that are relatively strong. So we're going to take a look at Newmont mining stock. And this is the daily data of Newmont. And you can see it looks pretty close to what the GDX did. Well, that's because it's one of the major component markets of the GDX. So they're going to usually look very similar. And again, real obvious overlapping corrective decline. So our objective right now is to identify when the Newmont is in a position to complete this decline, because then it'll be in a position to consider a long trade, because what happens when a correction is finished? Well, a resumption of the trend to a new high in this case, or a new extreme. So one of the things that I frequently do when I'm looking at, particularly at stocks and ETFs, is to cut out the kind of noise, I just look at the closing data. Let's do that with Newmont. So we don't need these swings on the chart anymore. And then we got the closing data. And let's look and see where we're at so far. Well, it looks like we've got a decline and then a correction. So probable 1 and a 2. I'm going to label these. And remember, more than likely, this decline is going to break down into 5 waves. And if it does, and if we can recognize when it's in the 5th wave as it subdivides this decline, what an opportunity that will be to go on the long side with minimum capital exposure. So let's go ahead and add some data. Well, what do we have so far? We have this is some correction greater than any correction since the wave 2 high. We have a potential 3 and 4. I'm going to label those, and we would put question marks on those. There we go. Let's just add some more data. So now we've had another advance greater in time and price than the 2 are the 4. So as of this point in time, what would indicate that this 5-wave decline is complete? Well, certainly a close above the wave 4 high. So let me put that in. So if we closed above 60.42, this section down should be complete. Does that automatically mean this entire complex corrective decline is complete? Not necessarily, but it's a possibility we have some other information, fundamental information, technical information that says more than likely it should be. But based just on pattern, it doesn't say it's complete, and it wouldn't imply that it's complete until we got all the way above that. Now, what's another trade strategy where we might be able to enter with much lower capital exposure than, for instance, buying if we took out this swing high and then putting our stop all the way back here? So that's a fair amount of capital exposure on the long side, if we're just basing our decision on the Elliott wave pattern position. Let's add some more data and see if we can identify a trade strategy that would be less capital exposure. Well, we went right up and took out the high. This indicates that there should be a completed 5-wave. Let's put that in. So what's an entry strategy we might consider here? Well, one is, of course, if closing above this high and then our stop would be below this low. That's about 10% away from the high. Let me just put that low in, that close in. 54.38. And so it's going to be about a $6 stop on a $60 price. That's a bit on the high side. The alternative is to wait for the initial correction and then identify if the correction should be complete and then go long, get on the long side. So I'm going to add some data here. So as of the last bar on the chart, we've had another little correction. Just looking at the closing data, looks like a little ABC, more or less an ABC flat. What would be a trade strategy at this point in time? Again, if we made a new high, where would our stop be? Well, it shouldn't need to be any further away than this low. So we've made a correction. Then if we make an advance to a new high, if this is an impulsive trend of higher highs and higher lows, then once we make the new high, the market should not come down below that low. So that's our trade strategy based on just the pattern position. So let's take a little review of where we're at as of now. We're in a potential position to have completed a higher time frame correction. The last section down, subdivided nicely into 5 waves. We've come up strongly, taken out the wave 4 high, indicating this 5-wave decline is complete. Then we've come up, we've made a correction greater in time and price than any correction since the beginning of this advance. So if we continue up and make a new high, we can put a stop just below that low. Let's go ahead and add some data. So we've closed well above this high. Our stop can be here. So this is a real high probability trade because we've got 2 confirmations that we've probably turned the corner and completed this low. Number one is we've confirmed that this 5-wave decline is complete by trading above the wave 4 high. And then we've made an advance correction and then continue to a new high. So again, this is an impulsive advance, and an impulsive advance is what should follow the end of a correction. So the specific trade strategy is we waited for the initial correction to the probable new trend, and then when we took out the swing high for a continuation of the trend, we can put our stop right below the last swing low. So let's add some more data onto the chart. Well, we confirmed that high, we continued higher, we've taken out this high, taken out this high. More than likely, this is a major correction. It's complete, and Newmont Mining has just taken off on these last few bars. So the trade strategy is really important. Well, this chart is daily data of the British pound versus the US dollar. So as of the last bar in the chart, we've had an advance and a potential ABC correction. So let's just say that our interest in the British pound was we're looking for an opportunity to get long. And so based on the pattern, at least, as of the last bar in the chart, we have a potential 1 and an ABC. We've already come down, and then we've had an advance. We made a new low, what I got labeled a wave C. Then we've come up and traded into the range of the wave A, closed into the range of the wave A. What would indicate that this ABC correction is complete and the bull trend should continue to a new high? Well, certainly a close above the closing high of what I got labeled as a wave B, and our trade above the high of the wave B. So we can wait for those to happen, or we can maybe go down to a smaller time frame trend and see if we can get an entry strategy on the subdivisions within these swings. So let's go down to 240-minute data. Now there's 240-minute data, and again, I'm showing the 1 and then the A, B, C, and then we're traded well into the range here. Pretty strong up move this day. And then we've had a correction as of the last bar on the chart, and this is the data from the day after this advance. It's the same data up through this last daily bar on this chart. So if we were looking at this 240-minute data, and I really should have a question mark here. We don't know if that's complete or not, but what would be a trade strategy, very logical trade strategy to enter on the British pound without having to wait until we traded above what I got labeled as wave B swing high? Well, if we've had an advance and a correction, now we don't know if that's complete or not, but if we traded above this swing high, that would indicate that the bull trend is resuming, and we'd probably continue to a new high. And where would we put our stop? Just logically, well, we'd put it right below this swing low. So we wouldn't have to put the stop below this extreme low, what I got labeled a wave C of 2. If we make a new high, then we put a stop below that low. So we don't know if the market's going to continue straight up, or maybe it's going to go down and take that low out. But that's a trade strategy we can identify in advance. So let's add some data onto this chart. So far, it's not going much of anywhere. There we go. As of the last bar in the chart, it looks like we've taken out that swing high. We have, by quite a few pips. So this would be a go long signal, and with the stop no further than below this swing low. And potentially we could put it, I mean, this is 240-minute data. It's a 4-hour bar. It's a very volatile bar, even below this low. But I'd like to see some confirmation of the continuation of the trend before I'd adjust it above that swing low. So let's add some more bars on. So far, we've got a great trade set up for potentially a fairly significant advance to well above this high. Let's add this data back on here. Get back down to where this section began. Pretty substantial advance here. We had assumed the next advance, particularly if this is a wave 2, is probably even going to be considerably greater than this advance. So let's first confirm if we're on the right side of the market, and then we'll see about adjusting our stop if the market continues to advance. So I'm going to reduce the data here again so we can keep focused on it closely. Let's add some more data. Well, we've gone up and we have taken out, or the pound advanced to above the wave B of 2 high. indicating that indeed this ABC correction is complete, probable wave 2. Where can we adjust our stop to? Well, certainly no further than below the swing low. And again, as the market continues to advance, we can adjust the stop. So I'm going to advance quite a bit of data here. If we believe this is a 1 and a 2, we should certainly make a wave 3 and then a 4 and a 5. So should have another significant advance, somewhat comparable to what I've got labeled as the wave 1, and then a correction and a continued advance. So let's advance the data. Well, this is daily data, and I've advanced the data a couple weeks from where we entered the position back here, the long position. And where are we at as of this point in time? Number one, how should a wave 3 unfold? How should it subdivide? Well, it should subdivide in an impulsive 5-wave trend. At the very least, it should be an impulsive type, non-overlapping higher highs and higher lows. Well, as of the last bar of this chart, which was a significant update, made a new high, new closing high, it sure looks like, just by looking at the daily data, a nice 1, 2, 3, 4, and 5. So if that's the case, we would be in the position to complete this wave 5 up from what I got labeled the higher time frame wave 2, which should itself complete a wave 3. What would be a trade strategy on adjusting our stops if we happen to be long the British pound? Well, certainly we'd bring our stop no further than below this wave 4 swing low. So let me just put a horizontal line there. So our stop would be no further than just 1 pip below this, what I've got labeled a wave 4 low. We don't know yet whether that's really a wave 4 or we're completing a wave 3, but it looks pretty obvious. It's an obvious swing low, which shouldn't be exceeded if this trend is bullish as anticipated. So let's add some bars onto the chart. Well, as of the last bar in the chart, we've been sideways for 4 or 5 bars. We're making a correction greater in time and price than anything since what I got labeled the wave 2 low. So more than likely, the wave 5 of 3 is complete. And if that's the case, at least if this market's in a position to complete the wave 5 of 3, do we want to adjust our stop much closer to the market? Well, typically we would do that, and we'd bring the stop up below this last swing low, because this is probably the higher time frame wave 4 low, comparable in the same degree as this wave 2 correction. Let me go and erase that, so we've got that on. Let me add some data. Well, as of the last bar in the chart, we've taken out that low. The British pound declined below that low, and all in one day. It didn't make a new high. It certainly made a new closing high. So probably this higher time frame, wave 5, let me just put this in, wave 5 and wave 3 is complete. And this is probably something along these lines. And if that's the case, we should continue to a new high to finish a 5-wave advance from this low back here. And it should go to a reasonable new high. So your trading strategy on where you exit your position will kind of depend on your trading time frame and maybe some of the other technicals that you're looking at. But from a pattern standpoint, I would certainly want to exit half a position if I believe this 5 waves in the wave 3 was complete, and then possibly hold the other position for the potential of a continuation of the trend to a new high. So in other words, once the wave 4 was established, well, I should say once we had this sideways for several days, adjust the stop in half the position below this swing low, which is in a position to the wave 4, keep the stop in the second half below this low. Then once we make this new high, adjust the stop on that second half of the position below this low. So let me add some more data on. And so far, again, we make good use of the intraday data when we're entering the position, but daily data is enough to adjust stops as the market continues. So we've continued. We did indeed make a new high. Is this a typical wave 5 into this new high? Well, we didn't make a new closing high. Well, we might have by a few pips here. But this was an outside bear reversal day. Not typically would we anticipate that this completed a wave 5 high. So from my point of view, we keep our stop back below this swing low, and for the potential of a continued advance to finish off a wave 5. Well, we just got stopped out. So what's going on here? It looks like we've completed this higher time frame advance, and we're going to have a correction greater in time and price than anything since this low. This is pretty sloppy, so we can't make any firm judgments, but the point would be, at least, we would be out of a long trade. Pretty nice profit on this trade. Even if the market continued to advance, well, we might miss that last section up, but we had a great entry here based simply on recognizing this was an ABC correction, and if so, how can we enter the market with acceptable capital exposure for a probable advance that would be comparable or greater than this wave 1. And then we recognized on this advance when it got to the new high, and it looked like it was completing a subdivision of a wave 3, of the wave 5 of 3, then we adjusted our stop closer to the market. And then as we made another new high, then again we adjusted the stop again to maintain and preserve most of the profit in this advance. So this was not an ideal sort of setup, but it was a really good one, and it's really based on recognizing the probable ABC correction and then positioning on the side of the market to take advantage of the completion of that correction.
Well, this is the notes futures contract, and it's daily data, June contract 2021. Let's take a look at this market as of the last bar in this chart, and that going into late March to early April, notes as well as bonds had been in a really consistent bear trend for many months. As of the last bar in this chart, it looks like notes have made a advance. Looks pretty nice, like a 5-wave advance, and then it's had a correction as of that point in time, the last bar in the chart. So if we look at this and consider this as a 5-wave advance, and this is a news volatility day, and as I explained earlier, is that I usually just ignore those days because they don't disturb the trend that was in place prior to that day. If we ignore that bar, it's just a nice clean trend. So we had a nice 5-wave advance, and then we've had a decline. So what is this? Should this be a complete correction, or is it the beginning of a bull trend? Have we reversed the major trend? We don't have to make that decision. Number one is, as you know, it can't be, or it shouldn't be, I should say, a completed correction, because a correction should not be complete on an impulsive 5-wave trend. So if notes are making a correction to a higher time frame bear trend, this should not be the end of a correction. This should only be the wave A of that correction. So we can label this a wave A. Let's just do that. And this would be part of our completed wave B. Can it be a completed wave B? Well, it certainly has corrected into the area of what a typical correction would be. The basic guideline we look at to a correction against a 5-wave impulse trend is that a correction usually is complete in the wave 4 of lesser degree. That would be within this range, and frequently right around the extreme of the wave 4. Well, we've already exceeded the extreme of the wave 4, so looks like we're in a position to have completed a wave B. However, should a wave B be complete on an impulsive or a corrective sort of structure? Well, it should be some sort of correction. A wave B should be an ABC or some kind of complex correction. Just looking at the daily data, does this look like an impulsive trend down, or does it look like a corrective trend down? Well, it looks like an impulsive trend down, and that would mean this decline should just be a wave A. So we're going to keep things really simple here. It may not be complete yet, but it should not be a completed wave B. It should be a wave A. Then we should have at least 2 more sections of a wave B, which should be corrective in nature, and then a wave C, which should be impulsive in nature. Let's go down to some 240-minute data. Now, even if you don't follow the market during the day, being able to collect some intraday data at the end of the day to see how some sections subdivide to help you understand if you're at or near the end of some section can be helpful. So we'll look at the 240-minute data through this same date, April 29th. Well, this is the 240-minute data through the last day that we're showing on the daily data. And here's this decline. Again, impulsive or corrective. Boy, it sure looks impulsive. So it should be a wave A. Wave A may be finished, may not be. But it should be, what it should not be is a correction against this 5-wave advance. So let's add some more data on the chart. And what our objective is at this point in time is to identify the end of a correction against this 5-wave advance, which we are considering a wave 1 or A. When the wave 2 or B is complete, we should have another advance or bull trend, probably similar, if not greater, to this, what I got labeled a wave 1 or A. So that's, I believe, more than a 2-week, almost a 3-week trend. So it would be worth our time to take our time and identify a good opportunity when this wave 2 or B correction should be complete. So this should be a wave A. It's working on a wave A. Well, let's add some data onto this chart and see if we can recognize when an ABC or some other type of correction would be complete, so we can position on the long side for the next impulsive trend. Well, there have added some data onto the chart, and we've made a new high. Well, does that mean this should be the completion of a correction and the resumption of a bull trend, and it's already continued since we made a new high? No, not necessarily. If this is a wave A, a B, and a C, well, we can have many different shapes of that. Not necessarily is it always going to be a simple ABC zigzag. It can be a ABC flat, an ABC irregular, where the wave B exceeds the extreme from where the wave A began, that sort of thing. So here we are, as of the last bar in the chart. Is this impulsive or is it corrective? Well, it kind of looks like it could be either. It certainly looks like 1, 2, 3, 4, 5, an impulsive advance. Kind of the key to this is that each one of these advancing sections is a little ABC, 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 correction, ABC. So it's probably some type of correction and not an impulse trend, and that's what we were anticipating it to be as a wave B correction. And then we should have a wave C. What should a wave C look like? Wave C should look like an impulsive 5-wave trend. That's the ideal. At the very least, it should look impulsive with higher highs and higher lows. So let's add some more data on the chart and get to the point where we may be at or near the end of a wave C. So there we go. I've added some more data onto the chart, several more days. Notice that I labeled the wave B, not at this extreme high. This is, again, it's a news day. Some volatility pop, immediately came back down. So I'm putting the wave B here. I'm ignoring that bar. So probable A, probable B. And where are we at as of the last bar of this chart? We had a nice decline, a correction, and another decline. It certainly looks like this is a potential 1 and a 2 and a 3, and it's probably making a wave 4. Then we'd have a wave 5 to complete a wave C. What would void this as a wave 4? Well, a trade into the range on this intraday data of the wave 1. That would indicate there shouldn't be a wave 4, and this 5-wave decline should be complete. If we get that signal, that pattern signal, we can then develop a specific trade strategy under the assumption, or I should say the probability, that the wave C is complete. So for now, though, we'd expect this is a wave 4, and we're probably going to make, or the potential at least, for wave 4 make a new decline. Let's add some bars on the chart. Well, that's not the case. So not only have we had a advance much greater in time and price than anything since what I got labeled the wave B high, we've traded well into the range of the wave 1 low in the intraday data. We could go back to the daily data and see when we close into the closing range, but this is certainly good enough for now. So more than likely, this is not an ideal impulsive decline, but we had a 1, 2, 3, 4, slight new low, looks like probably just by 1 or 2 ticks, wave 5, and more than likely that's a wave C. So we don't have to make that judgment quite yet, but we can develop a specific trade plan when the pattern indicates that indeed this is a wave 2 or B, and we're in the initial stages of an impulsive wave 3 or C trend to a new high. Got to put the question mark on there. Whoops, good enough. So we're quite a ways from this low. This would be a setup to go long, but let's let the market give us a better signal that this low is indeed complete. And one of the best trade strategies, and I've mentioned it many times, is what W.D. Gann used to teach is the best time to enter a trade is on the initial reaction against a new trend. Well, if we go under the assumption we're in a position to have completed this ABC correction and we're in the beginnings of an impulsive trend, the initial reaction to the new trend would be to identify when the market's in a position to have completed a wave 2 low. Let's add some data onto the chart. Well, there I've added about 2 more days of data, and this definitely, this little 3-day advance, less than 3-day, certainly looks impulsive. Even on this intraday data, probable 1, this clearly looks like a correction of some sort. And it's a correction that's coming down near where the wave 1 began, so we should be near the extreme to complete a correction. And so what would be a trade strategy as of this point in time? Well, trade strategy based on the pattern was if notes should advance to above the wave B high, that would be a go long signal. It would be a bull trend continuation signal with a stop below whatever the swing low was prior to exceeding that wave B high. That low may be at this point, but we may be sideways to down a little bit more, but the low has to be above what I got labeled a wave 2 or B, because if note should decline to below that low, then this can't be a 1, can't be a 2. Real simple stuff here. So let me add some data on. Oh, you know what we're going to do before that? Where are we? We're in the latter part of May. So I'm going to switch from the June contract to the September contract. So now we're on the September contract because the June contract at the end of the month of May is going to have really light volume, and we roll over to the September. So let's just start with the September. So here we are as of this potential wave 1 and then an ABC wave 2. So again, our trade strategy, right now at least, is to go long above the wave B high with our stop below the low made prior to entry. So let's add some data onto this chart. Well, there we are. A couple days later, advanced above this high for a buy stop to go long. And where's our stop? Our protective sell stop. Right above or right below the low made prior to entry. This even looks like an impulsive advance, doesn't it? So let's continue to add some bars, but let's develop basically our trade strategy before we add those bars. Where would be the next waypoint where we'd adjust the stop close to the market? Certainly, if we advanced into a wave 3 and we made a wave 4 correction and then a new high, it would be advance to above or just below a wave 4 correction. Would we want to adjust it before then? Probably not. That's a whole different subject basically on the details of trade strategies, but just using pattern, we don't want to be too fast to adjust the stop until the pattern clearly indicates we should do that. So let's add some bars onto the chart. So I've added several days of bars onto the chart. So let's take a look at where we're at. Probable 1, probable 2. Advance to a new high. Does this look impulsive? Well, it's almost by definition impulsive. It's a beautiful 5-wave advance actually into this high. And then we've come down with probable correction. Look at the overlaps here. Boy, that's the very almost definition of a correction. So we're probably making a wave 4. This is probably a wave 3, and we're making a wave 4. What's significant about what has happened so far as of the last bars in this chart? Well, we have come down, or the notes have come down, and traded well into the range of the wave 1. Now, traditional academic Elliott wave says a wave 4 cannot trade into the range of a wave 1 with one exception. What's that exception? Do you remember? That exception is if the market is making an ending diagonal. Where can an ending diagonal be? It can be a wave 5 of an impulse trend. It could be the last section of a correction such as a wave C. In other words, this is very likely a 1, 2, a 3. It's making a wave 4. And then if it continues to a new high for a wave 5, according to academic Elliott wave, that would have to be an ending diagonal. It would have to be a wave C and the completion of the ABC correction and not a wave 3. So that's a significant piece of information that we have over the next few days anyway. However, in our rules or guidelines, it's not a trade into the range of wave 1, it's a close into the closing range of wave 1. Here's the daily data, and as of the last bar in this chart, which is where we were at with the 240-minute data, notes have not closed into the closing range of wave 1. That's the wave 1 closing high. It has not closed below that low. However, the reason I would be looking at this as it's probably making a ending diagonal for the wave C is that it didn't just trade for a tick or two or for a short period of time into the range of the wave 1, even though it never closed below the closing high of wave 1. It was in that range of the wave 1 for several days. So that's fairly significant. So we still should be making a wave 4 correction. When the wave 4 is complete, we'd adjust our stop to below the low of the wave 4. And we should anticipate that we still have a new high to be made. But what's really significant, more than likely, this is an ending diagonal. That's information you can use. Let's add some more data onto the 240-minute chart. There we go. As of the last bar in the chart, we have exceeded the extreme of the wave 3. We've made some sort of complex correction. We could look at this as an A and then A, B, C for a B and a C. It doesn't really matter. What we were waiting for is the probable correction to be complete, identified this was certainly a correction that was being made, and then if we made a new high, we could begin to trail our stop much closer to the market. So at this point in time, if we brought our stop up to below this low, well, frankly, we're still barely at break even. Well, certainly once we've exceeded this high, we could just move it to break even at the least. So have we had a great impulse trend? Not so far, but now we should be in the wave 5. And so we want to be very alert to, if the market gets in a position to complete the wave 5, is then we want to bring our stop very close to the market for probably at the end of this 5-wave advance and to complete a wave C. Let's go ahead and add some data onto the chart and see what unfolds. Well, at this point in time, we've continued to advance as anticipated. Where are we at now with the pattern on the upside here? Well, boy, it certainly looks like 1, 2, 3, 4, and we're on a 5, doesn't it? That's just... So where would we adjust our stop? Well, there's no reason at this point in time, based on pattern, if we were along this market, to have the stop any further than just below this little swing low. Is this a 1, 2, 3, 4, and we're in wave 5, and is this 1, 2, 3, 4 of 5? Based on pattern, it sure looks like that. And if we decline below this swing low, we'd break that bullish pattern and have probably completed a wave 5 of a wave C on the way up. Fairly significant. We'd want to be out of the market and maximize our profit based on pattern at least. Let's add some more data onto the chart. Whoop, I got a little heavy on the shift key. As of the last bar in this chart, we would have been stopped out of the long trade, entered back at this point, and stopped out here. Boy, for what is that? That's probably 2 weeks of time. It's not a great, really great significant profit, but it was a good high probability trade in that we identified the probable position of this market every step of the way, and it sort of clearly was telling us whether it was in an impulse trend section or whether it was in a corrective section, and whether we're at or near the end of that trend. So what a great setup based just on pattern position for a high probability, low capital exposure trade that we're able to adjust the stop at least to close to break even. It took a while to get to that point, and then recognizing when we're at the end of the higher time frame trend. So how did it turn out? Let's add some more data. Oh boy, we went up and made a new high. Are we at or near the end of this advance? Probably we still are. Probably this is still a 1 and a 2, a 3 and a 4, and we're in that wave 5. Looks like the fifth wave may not be complete. Let's add some more data on. See how close we were. Well, it looks like we missed the last. Yes, it looks like we missed just this last section up. And then the market came down and had a very steep decline. So more than likely, there's our wave 5 of C, of a higher time frame wave C. And that's how we use pattern from entry to exit based on some simple rules and guidelines and recognizing how each section should unfold. This is Bitcoin weekly data from a very major low in March of 2020. into what looks like a high in February of 2021. To take a brief look at this is a consistent bull trend up. In fact, if we probably look at this as a 1, 2, 3, 4, 5 to complete a wave 1, then a correction, very short correction, short and shallow correction before, and it's kind of a rounded bottom here before the bull trend continued and actually accelerated into a new high into January 2021. Very typical of a wave 5, isn't it, where the trend tends to go at a higher rate of change and considerably longer in price range than the wave 1. So we got a 1, 2 and a 3, 4, real typical of a correction here, and then just accelerated advance for a probable wave 5. And as of the last bar of the chart, keep in mind again, weekly bars, this is what's called an outside to close reversal week. That means an outside week, it made a new high during the week, and then before that week closed, it closed down below the closes of the past 2 weeks. That's usually a pretty solid reversal signal, price reversal signal. So potential, boy, this is really a potential major top in Bitcoin here of a 1, 2, 3, 4, and a 5. So let's go down to a smaller time frame using that daily data and take a look at this last advance and see if it subdivides into 5 waves, a 5-wave impulsive non-overlapping, a 5-wave trend, which is what a wave 5 should subdivide into. So here's our daily data. Here's the the wave 3 high that we had on the weekly chart. Then this beautiful ABC correction, and then up into that outside to close reversal week in February. And again, it's just anybody that looks at this chart is going to say 1, 2, 3, 4, 5. It's that simple. If there ever looked like a textbook 5-wave impulse trend into a new high with a reversal, this market looked like that in February of 2021. So what would indicate that this 5-wave advance is complete? Well, of course, a trade below what we got labeled as a wave 4 low would break the higher highs and higher lows pattern and indicate that this 5-wave advance, which completed wave 5, was complete. So let's add some data onto this daily chart and see what happens and see what it tells us as we add bar by bar onto the chart. Bitcoin never traded below what we got labeled as a wave 4 low. Instead, it continued to a new high. And it certainly looks like this was a little ABC correction, and now we're doing another impulsive trend to a new high. So, in this situation, what has probably occurred? This is a beautiful 5-wave advance, but the market's made a new high. So what should this be? It's probably just a wave 1 of 5. So let's reorient ourselves here. And what was I using? I was using blue for the major ones. You know what I'm going to do? I'm going to lighten these up a bit so we can distinguish the degrees of the different trends. So that's just a 1, 2, 3, 4, 5, and then a wave 1, and then we had an A, B, C, and a wave 2. So now our objective is to identify the end of this wave 5. And we should have quite a ways to go. If this is just a 1 and a 2 of 5, then we have 3, 4, and 5 of 5 to go. So we're actually, we might even be in a position to want to look for a long trade, as well as identify what should be just a major top. Let's go back to the weekly. If this is the 3 and the 4, but we're continuing to advance, and this is just 1, 2 of 5, we may have a long ways to go on the upside. So we wouldn't want to be looking to short the trade by any means. We'd want to be looking to either enter for a continuation of the bull trend or to identify in the weeks ahead what would probably be a major multi-month high that would be followed by a correction to a 5-wave advance from the March low. So I'm going to focus on identifying the end of this wave 5 at this point in time. So let's add some more data. So if we made the new high, we should be in a wave 3. So let's just keep adding some data. Well, what's going on here? We made a new high, but we barely got above it. And then we had another ABC correction. And now it looks like we're continuing into another new high. And so new high, an overlap, an obvious overlap. Now we've made a new high again. What sort of trend can have a wave 4 overlap with a wave 1? Well, we call it, the general term is motive wave. It's still a trend section, but it's an overlap, so it's a diagonal. And in this case, since we had just a clear cut wave 4 here, 4 waves up from that low over a year ago, what if we're making an ending diagonal, a wave 5 ending diagonal? Well, that's about all it could be, isn't it? New high, correction. New high, correction into the range of wave 1. New high, well, we'll see if we make a correction back into the range of this area, we've probably completed a wave 5. Now, if we're in the position to complete an ending diagonal, a 5th wave ending diagonal, we're not only in a position, let me go back and a couple more weeks on there, we're not only in a position to end this 5-wave bull trend going back from March 2020, but that would probably result in a fairly dramatic reversal against the trend, because remember, ending diagonals are ending. They can only be the last section of a trend, an impulse trend such as a wave 5, or the last section of a correction such as a wave C. So this is warning us this indeed is the last section from the advance from 2020. And when it's complete, what's usually the aftermath of an ending diagonal? Usually quite a sharp correction. And if we're having a correction against a 5-wave trend, typically it would reach at least down to the range of the wave 4. So that's quite a ways down from where the market's at. In fact, that's almost a 50% decline in price from this high. Okay, this is all information we have as of this point in time, is that we're in a great position for that to be a 3, that to be a 4, and for Bitcoin to be working on wave 5 of 5, where the higher time frame wave 5 is going to subdivide into an ending diagonal when it's complete. A fairly dramatic reversal is likely. So that's all information, just basic rules and guidelines. Really simple. It's also information we had in our reports in advance, recognizing that this is probably an ending diagonal. And a lot of people, of course, were getting really bullish for Bitcoin around this period of time because it just kept making higher highs and higher highs. But we recognized that the end was near. Okay, at this point in time, what would indicate that we've completed the final wave 5? Remember that the sections in an ending diagonal can be 3s or 5s. Well, certainly if we traded into an overlap into this last swing high, that would be a strong indication that wave 5 was complete, or if we came down and traded below the last swing low, whatever that swing low might be. Let's take a look at these two items. And then I'm going to do a close here. And I'm going to make them both red, because if either of these signals are made, potentially good night Irene for Bitcoin, at least for several weeks, if not several months, probably several months. So we don't need to do any more labeling. If the market continues to advance and makes a higher swing low, then we'll be able to raise that reversal signal closer to the market. But these would certainly, if you were long, you'd want to exit the market, because it's in a position to complete the entire bull trend from the March 2020 low and have a really significant correction that should last several weeks to several months. So let's add some data onto the chart. Well, as of the last bar in the chart, we not only Bitcoin not only closed below 59,123, but traded below this swing low. More than likely, wave 5 of 5 is complete. Let me put these on. And this would be the week ending about the 23rd or 24th. So as of, it's actually the first bar of this week that traded below this little swing low. We've probably completed this 5-wave advance, and with the wave 5 an ending diagonal, and more than likely we've got many weeks and many months on the downside, and eventually would reach this range of where the wave 4 was made. That's really significant. So a couple things, a couple ways we can use this information. Number one is certainly we go back to the daily data. Certainly, given what we knew in these last few weeks, we would want to be advancing our stop at any long positions at whatever point the market would tell us that the wave 5 of 5 is complete, such as the close below the swing high close or the trade below that low. It's that simple. That's one way we can use this information. Of course, the other is, one, avoid being long until it appears that a correction is complete, and even consider a short trade. If we're at here, this is about 55, 56,000, and if the correction is going to be somewhere between 4,000 and 3,000, that would be typical down in the range of this wave 4, and typically it's near the extreme of the wave 4, which is around 3,000. That's going to be a huge retracement. That would be a decline of between, let's say, 30 and 50% from where the market is when it made its reversal signal. So let's add some data. And what's the safest time to enter? Safest time to enter is on the first reaction against the new trend. And our assumption is we just began a bear trend, a higher time frame correction. So I'm going to add some data. So this is just beautiful, and lots of lessons learned here. That's just about a perfect 5-wave decline. Let me get rid of these. And let me reduce the data a little bit so we can just focus in on these days. What do we got here? Well, advance, correction, advance, then a correction well into the range. Actually, looks like we had a new closing low. So we can look at this like an potentially we've completed, and we can put this as a 1 or A, and we're making a wave 2 or B. As of this point in time, we're in a position to have completed an ABC correction. The only thing that has not occurred is we haven't traded below the wave B low, and that's the signal that the correction is complete. So let's add some more bars, and this would be a great go short sale as well, because what should happen when this correction is complete? Well, we would probably have another decline similar to this decline, which was very substantial. It was, I think it was 20 to 30% decline, big decline. Let's add some data on here. Well, this looks like it's not a simple ABC. I could have left those ABCs on. It looks an awful lot, something along those lines. And this is an outside, what's this, a 3 close reversal day. So in other words, it's an outside day, closed below the closes of the past 3 days. Boy, that's a strong signal that a reversal is complete and this correction is complete. We have to trade and close below the wave D low. So what's the trade strategy? Well, one is I like use when we've made reversals like that. I frequently say if it closes, is there follow through the next day and we have a lower close, that's the signal to enter. The other would be a trade below the last swing low, an end R, a close below the last closing swing low, which is just a little bit below or above that low. So we're in a great position to, within a day or two, potentially anyway, completing a wave 2 or B high, of entering on the short side for a very substantial continuation of this bear trend in a wave 3 or a wave C. Let's add another bar on. There we go. If we had a sell stop below there, we would be short. Where would we put our protective buy stop? Well, no further than the last swing high. But let's use a little bit of logic. Boy, this was a panic liquidation day. And certainly if the trend is down, Bitcoin should not come up and trade above that high. So short or bear fund, whatever, below this swing low, stop above this high for a potential decline similar to this decline. Let's add some more bars on this chart. And there we go. We're not doing any time and price relationships, but certainly this decline is about equal to, if not a little bit greater than this decline. This one is. So we're in quite a position here, it looks. And it looks to me also like a 1, 2, 3, 4, maybe it's 5, something like that. We won't go into that detail right now. But where was the other target we had based on Elliott wave on the downside that we would want to be aware of? Well, that's the range of the wave 4, frequently with the terminus of the decline, the correction, right around where the extreme of the wave 4 was. And in this last bar, which is the last day on the chart so far, we're very close to reaching what would typically be, if this is a correction at least, the extreme. Now the only thing we might want to look at here is, because coming into this high was many months, it was a little bit over a year, I believe. It was from March 2020. This is an April high, over a year. And this is only a few weeks. More than likely, there's a lot more to go sideways to down before a correction is complete in Bitcoin. And I'm bringing the data almost up to date from when I'm recording this. I'll add some more data. Well, let's take a look here what we got as of this point in time. This is great, and we're almost within just a couple of days of when I'm recording this. So probably a 1, 2, looks like a 3, some kind of 4, made a new low, particularly if we look at this on closing data. A very distinct 1, 2, 3, some kind of running correction here, 4, and then a new low. So we're probably in a position to complete a wave 5. So tell me, if this is a 5-wave decline, let me put that in. It hasn't signaled that it's complete yet. But as of this point in time, should this be, whenever this bottom is made, should this be the end of a correction? Should it be a complete correction? Probably not. Why not? 5-wave impulse trend to a new low. 5 waves should not complete a correction. 5 waves should be an A of a correction, of which we should have a minimum of 3 sections. In other words, we should have a B, and then we should have a C. So that's what we would identify at this point in time, that we're probably making a low that would last a few weeks, but it would probably be a wave A low. We'd have a wave B correction, and then a wave C that would test or exceed this low. So there's probably a lot more time to go before the correction off of this April high is complete. So I hope you see how the pattern position in this market not only clearly identified that this was an ending diagonal, and when it was complete, we should have a correction greater in time and price than any of the corrections of the wave 2 or the wave 4 on the way up, which themselves were not really much. But we should get a correction typically would come down at least into the range of the wave 4 when this is complete. And of course, that's exactly what it did. And it's probably a long ways from complete, because this is probably 1, 2, 3, 4, and a 5. Maybe the 5 isn't even complete yet. I don't know. We'll find out in the days ahead. What I do know, and always try to really list what you know. What we do know is we have a 1, 2, 3, 4, and a 5 into a new low. This should not be the end of a correction.